Hi, everyone. This is Tim Melvin of the Tim Melvin Deep Value Report and Banking on Profits newsletter, coming from you down here in Central Florida after what's been a pretty positive week in the stock market. You had the S&P 500 up about 2.99%. The All World URTH index is up 2.27%, and leading the way this week is our index of community bank stocks, the QABA ETF, and that's up 3.21%. The world was really just pushing higher. Um, on follow through, I guess, from the ECB announcement that they're going to throw the entire kitchen sink at the economy, buy back bonds, and try to get that economy moving along again. We'll see how much success they will have. I'm not a huge fan of quantitative easing measures. I really wish that Mario Draghi and his bunch had underperformed relative to expectations again and created a nice big sell off in European equity markets that spilled over to U.S. markets because we still have a lot of cash, but we'd like to get invested. But only if we can buy stocks at the right price with the right margin of safety. Right now, we just don't see a whole lot of that, either in Europe or the United States or even Latin America and other regions of the country. That's why we have such big cash positions. Now, before we go any further, I got a bone to pick with my northern friends. Now, you guys, it's late January. Your weather's supposed to be horrible. You guys are going to get lots of snow and just generally bad weather over the next few days. But I got to ask you to start keeping it to yourselves. That polar air is pushing down here. We're only going to get into the 60s for a good portion of next week. And I don't want to have to continually move south. But I'm willing to do it if you guys don't stop sending that cold air down here. Anyway, the theme of the week for me really was the meeting in Davos. I'm a news junkie. I love following along everything that's going on over there. And the big takeaways really that I had reading all the reports and watching the videos is that there's a lot less confidence about the global economy and global markets this year than there has been in the last 3 or 4 years. Um, Everybody's talking about rising geopolitical risks. You've got Ukraine, Russia possibly picking conflicts with other nations in that region. You've got China and Japan just constantly irritating each other these days. Of course, the entire Middle East is just a geopolitical mess, and that continues to get worse even as we sit here talking. And everybody's very concerned about that because that is what can upset the global apple cart, if you will. Still lots of concerns in the past week about deflation, both in the global economy and the National Football League. And that has been one of the dominant conversations, and we're getting a consensus now that maybe the U.S. is not actually going to be able to raise interest rates this year, particularly if Europe spills over into the U.S., and that's getting more and more likely by the day, it looks like. That was brought up in this week's Barron's, as we go to part two of the roundtable. Love reading these things. Well, Felix Zulauf said that you should buy bonds, the TLT, the 20-year and longer bond ETF, and the dollar, because he just does not think that an interest rate cut is still on the table because he thinks the U.S. economy is going to underperform in 2015. That's an interesting idea. He also likes gold and the gold miners. I really hope he's right about that one because it'll bring some of our mining stocks up. We have several in the international portfolio, and we have silver miners in the domestic portfolio. So we'd love to see a rally in gold and the gold mining indexes and ETFs that he recommends. Abby Joseph Cohen is the least bullish that I have ever seen her, but she's still bullish. Her favorite pick appears to be a cybersecurity company trading at 110 times earnings. Now, cybersecurity is a business I would love to be in a very big way. I think it's a tremendous growth industry going forward. But so far, we've only found one little company that is even close enough to consider a value, and even at that, it trades at a premium to book value. So we're not quite ready to buy it yet, and we'll disclose it, of course, when we get there. Most of these are trading at 40, 50, even as I said, 110 times earnings. It's a fantastic business, but we just can't pay up for that type of price. But we do wish Miss Cohen best of luck with her highly overpriced pick. Brian Rogers of T. Rowe Price, sounding a theme. He says it's just going to be harder to make money in 2015. He's making his bets on really large cap stocks that might be a little less volatile in a downturn than some of the smaller stocks. He likes Hess, GE. He's got Boeing on his list of stocks, and he's got one that it's on my buying a crash list, and that's the conglomerate run by the Tisch brothers, Lowe's. They've got oil, they've got insurance, they've got real estate and hotels. That's just a fantastic collection of businesses run by some very smart people. When you get a big sell off in the stock market and this thing widens out to an even bigger discount to book value, that's a great place to add to that stock with the idea of just pretty much holding forever. Growth is consistent. It doesn't ever seem to get really egregiously overpriced. So that goes on your buying a crash list. Scott Black came out. He had both a bank, which is Customers Bank, CUBI, about 1.19 times book value, so not quite cheap enough for us, but it's an interesting business and an interesting bank. Do a lot of wholesale banking and a lot less consumer exposure. And he also likes a business development company. I love those things going into 2015. I think they're going to do extraordinarily well. He likes Ares Capital, which is ARES. So you might want to check that one out. It's about a 9.75% dividend yield and trading at a slight discount to asset value, as I recall. Now, a lot of our conversation this week was centered around the teeny tiny banks. And these are the ones that they're too small even to go in the banking on profits portfolio. They're extraordinarily illiquid. They can take days, weeks, occasionally months to buy, and the same amount of time to sell absent a takeover offer. Now, I love these banks, and particularly the ones that have large commercial and business exposure. I've done very well with them over the years. Now, the dilemma with the Banking on Profit service was, how do we get these into the discussion about community bank stock investing? They're too small to go into the portfolio because there's no way that we can say, several hundred people are going to be able to get even a couple hundred shares each in these ridiculously small banks. I mean, we're talking sub $10 million market cap. So, and then there's an ethical question, certainly, that if I had to buy them today, tell you about them tomorrow, and your buying pushes my stock price up, well, that's a problem. And that reflects the same thing if I put them into the newsletter and we get a couple guys take out the spread, the offer on a stock with a very large spread, and our performance looks better than it actually is. I have an ethical problem with that too. These stocks do well enough. I don't need to cheat to make the numbers look good. Last year, we picked our 10 favorite and we put them into an ebook and we sold it as a separate product for $99. And it sold pretty well, actually. We did well, but I don't like doing that either. I think that this year we decided that we're just going to keep these picks for Banking on Profit, the regular service, gold service, as you will, subscribers. We're going to keep those to ourselves. We put the list out, sent a spreadsheet out to everybody. And we're starting to talk about them. So far, we've covered a bunch of the banks in Arizona, Alabama, and Arkansas that are, they're really small. They have less than $500 million in assets, but they're trading below book value. And we're just kind of going through and talking about the pros and cons of each one. When we're done this video today, I'm going to go have some lunch. I'm going to come back, and there's no football game on today, really. I mean, the Pro Bowl, but who really watches that? And I'm going to start doing some work on some California banks and talk about some of my favorite California teeny tiny banks that you might want to consider investing in. So anyway, that's available to subscribers only, but it's not like we're charging an arm and a leg for the service. We're going to make that a bigger part of the service as we go along, not ever backing away from our core portfolio, of course. These are the ones that they're safe, they're cheap. Most of them have activist involvement. In fact, I sent the buy list out on Friday. We had 30 net stocks on our buy list that are trading below 85% of tangible book value, can still be purchased. Really reasonable non-performing asset levels and excess capital as measured by equity to assets. So, just a great list of stocks that you can buy, hold on to. Lots of good things should happen. Always the possibility of a takeover. The dividends are increasing. They're buying back stock below book value, which is a great thing. Earnings are improving. Loan growth is coming up a little bit for some of these. So just 30 great banks. And went in, dug a little further. 22 of the stocks on our current buy list also have a well-known bank stock activist or specialist investor on the shareholder list with a meaningful position. Now, you might remember from the Stern AG report that we talked about late last year, banks with an activist presence, the small community banks, tend to outperform the overall market by a tremendous margin. In fact, it was something along the lines of 28 full percentage points from the time the activists got involved until they exited the position or the stock was taken over. About a third of them were actually taken over. That's exactly what we expect to see from this list in 2015. So talking about the teeny tiny banks is a lot of fun. It has sparked a great discussion with readers as we talk about different ways to find these stocks, because there's not really any one database that you can use. You've got to use several in combination because they're real small, and most of the stock screeners out there have market cap cutoffs of one sort or another. So you really have to dig to find this stuff. Many of them are not filing with the SEC, so the reports can be tricky to dig out. So anyway, we've had a great conversation about that, and I hope that keeps going on. But the core portfolio is going to continue to do well. I think if we focus on the ones with an activist presence, maybe we can even increase those returns over time. So now we have a big week coming up. We have the Greek elections. We should actually know those results later today. We have the Congressional Budget Office will be out with their outlook for 2015. Of course, we have a Fed meeting. It'll be interesting to see their comments and thoughts on the large bomb, or if you will, that the ECB threw out there last week by ramping up substantially their quantitative easing program over and above expectations. So it'll be interesting to see what comes out of the Fed meeting, and then we'll also have a first look at fourth quarter GDP. And the good news is there's only 24 days until pitchers and catchers report at Ed Smith Stadium in Sarasota, Florida for the Baltimore Orioles spring training. So we're getting closer all the time. Which brings me to this. We can't go through the week without commenting on the fact that Mr. Cub, Ernie Banks, passed away this year. Mr. Banks was the first black player on the Chicago Cubs, and over his 19-year career eventually became known as Mr. Cub and is one of the most revered sports fans in the city of Chicago. He had 14 All-Star Game selections, and in those 14 games he hit .303, so he really liked the spotlight. He hit 40 or more home runs in 4 consecutive years. Not Willie Mays nor Hank Aaron, who played at the same time as Ernie Banks, achieved that feat. 3 in a row was the top streak for both of those distinguished gentlemen. He won back-to-back MVPs. That's without ever making the playoffs. So in the late 50s, he was the MVP 2 years in a row, in spite of not winning the pennant at the time. That's a remarkable feat. Usually your MVP comes from a team that goes deep into the playoffs. So that's remarkable. He's also hit, and you'll love this, Mays and Aaron didn't never achieve this either. He's one of the only players with multi-home run games against both Warren Spahn and Sandy Koufax, both legendary pitchers during the time that Mr. Banks was in the league. Ernie Banks was a great baseball player. He was a great man, and he leaves a tremendous legacy for the city of Chicago and Major League Baseball in general. And I will tell you, if there is any justice in the universe today, Mr. Cub is finally playing in the postseason. Goodbye, and thanks for everything, Ernie Banks. Anyway, big week coming up. We'll talk to you guys next week, and make it a good one.